Hello, this is Ahura, and we will be with you to review the US labor market data and market reactions. That's it today. This was an NFP day, and while it was an NFP day, we were waiting for some good news from the US labor market data. At the same time, we had such a good news, so very good news from trade talks between US and China in one hand, and on the other hand, yesterday or the day before that, we had a phone call between US President Donald Trump and Russian President Mr. Just forget the name sometimes, Mr. Putin. That happened. That led the market sentiment to such a somehow we can say a good sentiment. So the market had its good sentiment even thought before the U.S. labor market data. So we have to understand why I'm telling that, because to understand the market reaction and movements, we have to mix the reactions to the fundamental news and also like the geopolitical news, and also at the same time to the US labor market data. Labor data, let's first review the data, and then we can go forward for more detail. Average earnings increased by 0.4% in a month, twice more than previous months, more than April, and also a little bit more than 0.3% expected in market expectations, actually. On the annual scale, average earning increased by 3.9%. Very good number, which means that the market already getting back to the normal condition. So when the people have more money, it means that they can spend more, so demand can increase, so it can increase the inflation pressures, and generally we can say that cannot be such a good news for the inflation control. But the number is not a worrying to say that okay, the earnings increase in such a big rate that we can say that it can increase directly the inflation. So normal standard. New created job increased by 139,000, almost 13,000 more than expected, market expectation, 126K expected, but slightly lower than the previous month. Generally, it says that the labor market is getting cooler, but fine, but the condition is fine, especially when we see that the unemployment rate at 4.2% and private jobs creation is 140K, a little bit more than 100, little bit less than 140K expected. 146K in previous month, sorry, little bit less than 146K in the previous month, and very good jump or improvement from the 110K expectation. So generally, the data says the market's getting cooler, labor market's getting cooler, both private section. So 146 gets slightly lower to 140, 147K getting lower to 139K for overall NFP and private jobs, but unemployment rate steady at 4.2%. Average earning increasing by 0.4%. Generally, what we can say here, and the data is better than expectation. So what we can say here, labor market's getting cooler, but still is resilience. That's what we can understand from these numbers. Which these expectations, these numbers change the expectations of rate cut for next week's meeting to a little bit, to almost 0% for the rate cut. So it means that the no rates cut almost 100%, 99.8% expectation for no rates cuts. But that was not a surprise. We knew about that. What was a little bit surprise for the market is for July meeting. For the July meeting, now the market's expecting about 85% of not rate cut. So these numbers say that the labor market is fine. We had the GDP numbers, we had other the PMI numbers. Generally, the data were somehow positive, or data were good. So U.S. economy is moving a little bit better than expected and moving forward. The numbers are fine, not good, but they're fine. So there's a difference between the good and fine, but it's good, but it's fine. So which means that we have no expectations for more than we don't have expectation for more than 2 rate cuts. So only 2 rate cuts, the maximum, can be expected for this year, and that cannot be start from July, because in September is fine to start at least 1 rate cut, and then for December we can wait for the data and see what's going to happen in the market. So the first rate cut wouldn't be earlier than September meeting. So it wouldn't be earlier than September meeting. Now we expect the first rate cut in September. and maximum 2 rates cut. That's what we can expect in the market. So these numbers, we can say now, okay, let's go to the chart, and I can explain the other reactions that we can mix, as mentioned, we can mix the reaction of these data and the trade talks and others that we had. With the ongoing trade talks and geopolitical tensions, we cannot count too much on the US dollar, but higher rates for longer can increase the US dollar demand. 99, 101, that's what we can expect for dollar index, at least in the short term. For the next week also, US dollar index can go back a little bit higher to its 2 weeks ago's channel to 99 point, from the 99 to 101. So that's going to be the expected channel for US dollar index. Slightly higher rate for US dollar can put the pressure on the gold. Lower markets risk also can put the pressure on the gold. So the gold can have some correction between 3,200 and 3,300. That's areas we are expecting to see the gold for the next week in the short term, midterm. And after that, we can see the next trend. So what we can expect here, the gold demand can be lower as, so we can see, you can go check and you can check the stock market charts. S&P 500 moving towards 6,000. Higher than 6,000 right now is a little bit hard to understand. Increasing the stock market, the main reason is because of the positive news from the trade talks. So that supported the stock markets. But at the same time, these data from the labor market means a higher rate for longer. So which means money going to be harder to find, to be finding the money and investment will be a little bit harder for the companies, which can limit the stock market's positive movement. So the stock markets can be move around the current rates around, for example, for S&P 500, something about 6,000 is expected digit and number. We can say, okay, because we can expect to see the S&P 500 in these areas. For the energy market and oil market, that can be the good news, especially with ongoing trade talks, but we don't have such a good expectations for the demand. So that's why the oil price between 60 and 64 dollar per barrel is expected, which we were expecting at the beginning of the week. For the next week also, 60 and 64 is going to be the area. This area is maximum is going to be the expected area for the oil and WTI. That news, since that it can increase the market confidence and can lower the market, can lower the risk, could be the positive news for the cryptocurrency market. The Bitcoin, which lowered under 101K earlier today, late last night and earlier today, late last night, you can say. From today, it increased slightly with the positive news from the trade talks at the one hand, and other hand, right now we have the good news from the labor market. So lower sentiments, lower risk in the market can support the market sentiment, and it can be the positive for the Bitcoin and generally for the cryptocurrency market. Bitcoin could trade, if it can increase about 104K, it can go towards 105 and 108,000 for the week ahead. So let's review the data. The US dollar index with these numbers, 99, 101, an expected range for US dollar. Gold could be under pressure between 3,200 to 3,300 for the short term before the next trend. WTI, that's not such a big surprise for the gold or for the energy market. So 60 and 64 US dollar range of the 60 and 64 US dollar per barrel for the oil could continue for now. This range is we almost 3 weeks in this range, and this range can continue further. For the stock markets, these numbers are not such these numbers, they are not defending, they are not supporting the stock markets in one hand, because generally higher rates for longer could be the negative news for the stock market, but on the other hand, geopolitical tensions and trade talks and trade progress can be positive for them. So currently holding these levels, side movement with the slightly downward pressure would be the expectations for stock markets. About the Bitcoin and other cryptocurrency also explained. That was the labor market data and market reactions. If expectations, if you had any other questions, don't forget to write down in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye-bye.